Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
So understanding the ISE pair value is quite simple. Remember, if you're looking at the convention, let me just try to give you a nice view of this. It's dollar based. So in every pair, I know in the spot markets, 3 trade one way and 3 trade actually the reverse. So it's euro versus the dollar, Australian dollar versus the dollar. British pound versus the dollar. All of the ISE's products are based on the dollar, so you can understand the ISE's rate and then the opposing rate. So you can actually calculate it. 124 is just about 80 cents Australian, so you could do that. British pound, 0.60 or 60.59 is 1.65. Very simple to understand one versus another. And of course, the Japanese yen is going to be familiar to all of you, and so is the Swiss franc, and the Canadian dollar. So those are the 3 they're going to look very much alike. The premiums are multiplied by 100. So if you see a premium that's at the ISE, that's $2.50. It's just $250, not including any commissions, and you have to decide that on the strike price. The further out of the money, the more leverage that you're using, less likely that you're going to be right, although you have more leverage there. So I took a look this morning at the EUI options in September, and back to a couple of Jack scenarios. Number one is that if all of a sudden, if the euro starts to emerge, Euroland emerges ahead of the United States, well, then the dollar is going to decline, and you're going to be looking over here at the put options. So again, you take a look at the September, depending on how much leverage you want to use, the September 69s are offered at about $1.07. You could actually look at the September 72s. We're right there at 71.03, so that one's going to be a little bit more money, and of course that's going to be a bigger delta. Let's just say that you believe that the U.S. is actually going to emerge from this recession first. Well, more than likely, then you're going to want to look at call options, and of course there are plenty of opportunities there. And I just looked at September, but there are other months. If you thought that the dollar is going to rally tremendously, you could look at the out-of-the-money option. Let's say the SEP 76. Wanted to look at an at-the-money, you'd be looking at the 71s. The out-of-the-money was at around 60 cents or so. The 71s were offered at around 229, and of course you could go in-the-money options too. Let's say the 67.5s are worth about $4.65 or so. Lots of ways to trade it. Remember, if you're bullish on the dollar, you'd be looking for calls, and if you're bearish on the dollar, means you're bullish on the euro, you'd be looking at puts. So if we're looking at one of the commodity currencies, the Canadian dollar, and I looked at it this afternoon at 114.96, actually this morning, 114.96, same sort of thing. The idea is that if this is to continue what we've seen, is that you'd be looking at the put options. So any of these put options would quite possibly make sense if you think the commodities are going to continue to increase and that the world is going to be a safe place as far as the economies. The ISE FX options, specifically the puts, would probably make sense. If you see that we're going to be more in a risk aversion mode, well, the calls would probably make sense as we get back to where we were sometime in February, January, or December last year, where people were hiding in the U.S. And the U.S. dollar was worth a bit more. Now, of course, the Australian dollar's had a tremendous run this year, tremendous run. So if you think that that's going to continue, well, again, risk appetite is going to be the put options here. And risk aversion, if you think that the world is going to sort of hide in the U.S., you'd be looking at call options. So risk aversion, you're looking at the calls. If you look at risk appetite, would be the puts. And, of course, there are plenty of ways to trade it, all the way out to an out-of-the-money option here that's offered at 348, the SEP 131s. And if you look in the out-of-the-money put, the SEP, let's say the 122s, are offered at 278. plenty of options in between, and we closed, well, I don't know where we closed, but when I built this slide, we were trading around 125. Of course, you remember that we traded at above 160 late last year and early this year, so there's plenty of room for movement. Of course, we traded almost at parity at some point about 2 years ago. So, we're trading 124. We're closer to the bottom than the top. Of course, you can always break through there, too, below parity, although many economists think that, according to PPP, that the Australian dollar would be extremely overvalued there. But, of course, it doesn't matter. It doesn't necessarily mean that it's going to bottom at any spot where we think it's overvalued or undervalued. A couple of reminders. Number one, you can go to the ISE website, learn more about the product, www.fxoptions.com, www.ise.com/FX. Lots of ways to get to us. I would recommend that you sign up for Jack's newsletter, blackswantrading.com. You can go to blackswantrading.com, get the currency currents. It's free, and again, if you like it, you could sign up for the paid service, the Currency Strategist. The website is right there at blackswantrading.com. We have lots of webinars. In fact, I'd rather sort of talk about that in a few moments. I didn't really touch on this. We have 6 pairs, and the most important thing is that you can trade these right through your equity options broker. So these are the symbols. If you have connection, if you have the ability to trade any of the ISE, not only the ISE, but all the option markets, whether it's Google, Microsoft, IBM, or anything else, you will be able to access the ISE FX options. So if you have a question on brokers, you can always send me a quick message on that. They are exchange-listed securities available through your options broker. They're cash settled, European style, and you can trade spreads. You can do a lot of different things. I urge you to go to www.ise.com/FX. And as you know, we have webinars each and every week, and we have about 150 that are archived. So please check all of those out. Jack, you're probably looking through some questions. So Jack, why don't we start on the questions? Number one, William he had a question on the yen-RMB correlation. Have you done any studies on that, yen versus the RMB?
It's tough because the RMB doesn't move.
Right.
It's a peg currency, as you saw that chart. It's a monthly chart, but if you pull up a daily chart, it just doesn't move that much. We've seen no real relation. When a government can control its currency the way China does, it's tough to find any real correlation. They can yank it up and down as they choose. So you can't really compare a peg currency like that to a free floating currency.
Good point. Mr. Bear has a question about why can't Brazil just be the new China? Why can't somebody else emulate what China is doing?
Yeah, and I think he continues and says more democracy and more unions. That's the problem. We have this little thing called democracy. We have a lot of different interest groups in the U.S. Look how when's the last time we built a refinery? What, 20 years, 25 years? Every interest, every environmental group comes out of the woodwork. When we try and drill or build a refinery. China doesn't have any of those problems. Matter of fact, they can just displace 2, 3, 5 million people and create a whole new city and move them completely if they want to build a dam or do something. It's a big advantage when you're able to do those things in a way. Ultimately, it may come back to bite them because of the tensions it's developed, but at the moment it hasn't. So I think Chris's idea of democracy and unions is all part of it.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.